Today I traded on one ticker, let's see, SNMP, which was the big gapper pre-markets, and for the rest of the day it was crapping really. It went from 30 cents, 37 cents to like 140 pre-markets. I saw it when it was going to 140. I didn't want to chase it, and so I basically let it dip down, and that's when I enter. Overall, I got like lots of paper cuts on it. I overtraded. I got lots of paper cuts on it. Those paper cuts were within like 50 cents to like $1.60 paper cuts. So my overall gains were $4.80. So it's a green day. It's a green day, but a lot of paper cuts. So overall, I made like 1% of my buying power today. My buying power today was in at $400. I had like $400 power, buying power, but I made like 1%. Need to trade better, really. Wait for the ideal setup. Bounce of support, morning panic, and stuff like that. But for now, but for now, it's basically going like small, taking paper cuts, cutting my losses quickly, letting my trades, letting my gains go higher, and cutting my losses like quickly. In this trade, there were like a couple trades, like one trade that I didn't cut my losses quick enough, but it was it was like smaller size than what I did with the others. So yeah, and here's my screen. Says yes, SNMP. As you can see, I traded from pre-market to the open. I started trading at 723 to the open. So I was watching. I was waiting for it to like go to the $1 area, right? Because $1 is a psychological support, as well as it was holding previously. Even though it's like very small volume, it's the psychological support area. So I saw it came back from 140, um, right here, to 115. Should have entered here because this was a support area. It went from 115 to 130. I missed it. Didn't want to chase it, so didn't enter 130. I waited for it to dip again. And once again, it dipped to 115 and then move up. And I entered 121, right? My risk this time was like very, very small. I entered 121, as you can see with my exit at 120, 119, 2 cents. I I entered 121. It moved higher, but it never reached 130. It reached 127. I should have exit as it failed to move higher than 121. I should have not 127. Failed to break out 127. I should exit right away at that point. Should have, because it it basically hit my risk to reward, uh 123 risk to reward. So risking 2 cents make 6 cents, right? So instead, I held it and I basically uh, lost 2 cents on it in up paper cuts. Same with this paper cuts. I basically break even at on this trade on the bounce trade again because it made a higher low and it went, but it failed to break out this resistance at 123, 124. So I basically just exit, break even. I re-enter when it moved back down and it bounces like the 110 area. I re-enter 112, risking very small, and it failed to break 1/4 chain. So I exit at 111, and then it went to 108, and it came back. I was waiting for the 1/4 to break. 1/4 broke. I entered 115. I decided to this time risk 3 cents, right? And what happened? It went to 112. I exit, and I got chopped. So another paper cuts. So lose. So it made my overall accounts went from um 1017 to like 1015, so around there. Lost 2 cents on these paper cuts, and then I decided to re-enter again because it is making a higher low at 112, and it is breaking the resistance at 114. And I decided to enter, and so I basically sold at 120, making 5 cents on it on the share because it was having some chop around 124. I basically just took my profits while it's there within resistance. And I was waiting for 124 to break. And 124 did break, and I entered 125. My entry and my risk reward were my risk was very small, right? So what happened was it went to 132. My goal was to get it to 135. And what happened was it went to 132. It was showing sign of weakness. I decided to sell half of my position. If if it came back to my entry, I will break even, right? That was the idea. It went to 27. It went and then it spiked to 138 and I sold at 135. So overall, I made like 7 cents on this trade. 7 to 8 cents on this trade, really. So it was a 6% gain, which was good compared to these losses. And then it was good too because I took the meat of the move. I took like the meat of this move because it went to 138 and then it kept dropping, dropping, dropping. That was good. I saved myself from this fail to broke out at 140. And then it came down to 115. It it was the open. So it was it was the open, very, very volatile move, right? I decided to have a bigger risk because it was volatile. I decided to have 7 cents risk. So I would exit if it hit 120. So 7 to 8 cents risk, right? It will hit 121, 121. If 121 break, I get out. So what happened? I entered 128, not 28.5, buying the ask. It went higher, right? And I sold 135. I would have sold at 135 if it wasn't for this move to 121. It was an emotional exit. I should, yeah, it was an emotional exit. Should have make a clearer image to it, but I still make like 6.5 cents on it. It was fine. 5% move. I'm okay with it. And then I tried to enter on the breakout 141. My entry was supposed to be 143, but it halts at 142. So with that, I basically stopped trading it for a while because it was a halted stock. It opened at 143, right? It moved higher to like 150. Now 150 is a psychological resistance right now because it moved to 150 and then it dipped down to 147 and then it dipped further to 143. Is it dip further? Um, yeah, it basically yeah dipped further to 143 and then spiked all the way to 160 and then came back down to 155. I decided to enter on this red candle at 150 because thinking that 150 will hold. But at this point, my I have like is it $50? I have like 60 dollars shares buying power left, and so I decided to half half my position or basically buy it with 20 20 cents, 20 shares. It was good that I did that because I gave back both. I gave back profits on both of them. I was risking 5 cents, so risking like $1 on each position, aiming for a break of 160 and higher, but it failed on both cases. I entered 146 here because I was thinking, huh, might have supports at like 144, and I was risking 5 cents on it. And again, it did move to 150, but it 150 psychological resistance, so it failed. It moved lower. It broke my 141 uh, risk. I exit as quickly as I can, and this it's a good thing too that I exit like as quickly as I can. Let's see how much what percentage that was. 146. Wait, I lost like 5.2%. Oh, 5.1%. I lost like 5.1% on it, but it was half of it was a smaller share size, so smaller dollar values. Without these two losses, I would make like $7, $7 to $8, right? But with these two losses, yeah. So basically, on this dip, it halts at 135. A lot of people were caught in this halt when after they bought like 146. They were caught in this halt and they actually saw like in the 110s. It was a good thing. This showed that um cutting losses is good for the mentality. Like cutting losses very quickly save you from destroying your accounts. So even though even though I got out at 138 because it was a flush, it broke my risk. At least I exit when my risk break. That's the good part. So once again, overtraded, small share size on each position, like in the 50s. I'm not ready to put $100 on there yet. Previous time in trade in like September, I used like $100. Too much stress for me right now because I don't want to risk 1% of my overall account yet. I'm not ready for that. So I'll risk 0.1%. So basically like $1 or two. So small gains, small losses. I'm still learning. So yeah. So overall, it's a green day, but it was choppy, and it was with a bunch of paper cuts. So yeah, and as you can see, the whole stock was basically dipping all day, and they had some nice bounce at $1. Yes, as you can see, there's barely any strength to it. 4 cents from the $1 bounce. Yeah, barely any strength, and it went from 160 all the way to 172. So that's like a 90 cents uh if you're shorting. Yeah. If you are shorting and you short at 160, congrats. Because you just make 90 cents on your money. Yeah, per share. If you're going long at 160 and you haven't cut your losses, even though it's at 72 cents, if you haven't cut your losses on this halt, resume, good luck. Because this is a penny stock. It used to be 37 cents. It used to be 37 cents. If you bought it at 137 cents and you haven't take your profits 160, I hope you take your profits in the 170 in the 70 cents. That's 100% on your money. But still, yeah. Good luck to whoever is bought at 160 and still holding, because this is a penny stock. When you're trading penny stocks, you don't invest in them. You day trade them. You take your losses. You don't bag hold them. Because if you look at the history, um, let's see, 180, and the 180 charts for like 6 months, it's basically traded in the cents. And then if you look at the 1 year charts, again in the cents. If you look at the 3 year charts, yes, it used to be like over $10, but there is something wrong with the company, especially with earning. As you can see, each earning it dip, each earning it dip. So so this company don't it doesn't look like it has good fundamentals. And then it spike. What was the news? Oh yeah, NYSE it regained compliance with the New York Stock Exchange. Good news, but still, it was 37 cents yesterday, and it moved to 160. That's as good as it can get. If it can move again, and I'm wrong, I will trade again. But it's basically just the fundamentals is not good. The fundamentals not good. This price actions, like for the rest of the day, was a gap and crap. Really, if a lot of shorts were stuck in here, it might have some short squeezes. But yeah, in my opinion, the fundamentals weren't good. So congrats to shorts from 160 or the $1 area all the way to 70. So let's see, how much will you make your money here? 0.70. So you basically make like 55% of your money. So yeah, 55% from 160. Yeah, to whoever is holding 160, good luck. And congrats, short sellers who sold at 160 and get out. Yeah, and gone out. I'm not sure what will happen on Monday, but we'll see. So